Hello everyone, welcome back to my channel. So recently Shamant has been always on the headlines.
Get the money. Get the money. And then let's get around the table and let's create new rules. Literally that simple. Get the fucking money.
So today I want to talk about one of his SPAC. Ticker symbol is IPOE. So IPOE has announced earlier that it will have the merge with SoFi, which is one of the fintech companies that has been raising rapidly in the past years. And it has also been in one of the CNBC Disruptor 50. So it's a very innovative company. So today I want to share some of the findings I have. Hope you guys will find it helpful. So now let's get started. First, I want to talk about some background of Shamant. So nowadays, a lot of people look up to him, that he made a lot of good investment decisions. So Shamant was born in 1976 in Sri Lanka. And according to the information online, family is not that rich when he's young. And then at the early age, he immigrated to Canada. Later, after he graduated, he came to working in the US. So I think one of his major achievements is in 2005, he went to Facebook and become one of the executives. And at Facebook, that's a time when he thinks the capital has blown the bubble of those tech companies. And that's when probably he got the idea to be the capital himself. So in 2011, he left Facebook, started up his own company, Social Capital. Other than his company Social Capital, he has made several successful personal investments, including Amazon, Tesla, Slack, Bitcoin. For example, for Amazon, he started investing in Amazon in 2016 because he sees the potential of Amazon's retail growth as well as AWS growth. And last year, two of the SPACs has been listed, including Virgin Galactic, and his SPACs has been increased more than 100%. So a lot of investors may be wondering why Shamant wanna invest in SoFi this time. So he basically gives 3 reasons after I read his one-pager that he always share on his Twitter account. First reason is low cost or zero cost. As now the trend in the fintech industry, like no matter it's brokerage companies or banking companies, they are trying to lower the cost. And the second one is transparency. So for traditional banks like Chase, there's always some hidden costs that the users are hate about. And users just need the transparency of those fees. They don't just want to pay for something they don't know. So Shamant mentioned SoFi is very transparent about the fees, so they will let their users know what they are paying for. And the third is one-stop shop. So in SoFi's platform, you can basically do everything you need for the financial services, including student loans, mortgages, investing, money, just everything. The business is similar to Square. So other than these 3 reasons that Shamant mentioned, I also, by looking at their investor deck, also have some thoughts. The first one is that because the traditional bank have the legacy code, so it's very hard to do the innovation. But SoFi, as a startup fintech company, they can do a lot of innovative things in their app. So that's why they can combine everything in one app. So when I was looking at their deck, one of the things catch my eye is that their users is always very sticky and very loyal, so it can enable the company to do the cross-selling. Therefore, they can reduce their customer acquisition cost because it has already paid earlier. So give an example is that the company started with a personal loan, which the product, they don't make much money. But after the personal loan product, they may launch some other products like mortgages, the investing product and money product. And because of the customers is already there, they don't need to pay the additional acquisition cost. So by doing this cross-selling, they are enabled to increase their profit margin from 45% to the 86%. And the second bullish opinion is that, so last year, SoFi has acquired fintech company Galileo with $1.2 billion. And what Galileo does is to provide the APIs to the digital banks and other financial services. Galileo's customers are including a lot of fintech companies like Chime, Robinhood, and SoFi and others. It has also owned 1/3 of Apex Clearing, which is a clearing company of a lot of fintech brokerage companies. So by acquiring Galileo, the company has more control of their technologies. A metaphor for that is that Galileo is like the AWS to Amazon. So we know that Amazon's exponential growth is due to AWS because it provides cloud services for other business and it's scalable. In Galileo's case, because it has worked with a lot of fintech companies and all the user data is on the Galileo's platforms, so those fintech companies is not likely to switch to other platform if Galileo provide a good service. And this business model is scalable because Galileo charge those companies like Chime based on per user. So that when those fintech companies is growing and gain more users, they also need to pay more to Galileo business. So it has a growth potential just like what AWS did. And that has also Shamanth mentioned that this time when he was investing in SoFi, it reminds him the investment in Amazon 4 years ago because he just saw the huge potential of growth of not just SoFi but also the technology platform Galileo. Every time Shamanth has a SPAC, it will give a one-pager on his Twitter showing all the info about the stock. So he also mentioned the margin of safety for new investors. When the SPAC IPOE just launched, EV divided by revenue is 6.7. That implies the PS ratio is around 6.7. So now the stock price has grown from $10 per share to, I checked last Friday, it's grown a lot and the current is $25. So that shows the PS ratio is already like around 17. And whether we want to know that is expensive or not, we can also check the PS ratio of Square. So currently Square's PS ratio is 13.5. So we know that currently SoFi stock or IPOE is more expensive than Square, and considering the current price of Square is already $215, it's on the expensive side. So I will start in the long position when the stock drop below $20. So right now at the $25, I will not buy it because my stock is very expensive. Even for good stock, we need to buy at a cheaper price. Yeah, I think this thought is very inspiring because so Shaman's idea is to help the common people, and I think that's why he also participated in this GME event recently. And SoFi is one of the same concept as his, that is to help common people, whether they want to start a business, they need the mortgage, it's just to provide those financial services at a reasonable cost. So that's concept is very cool, I think. So yeah, that's all the things I want to talk about IPOE. Hope you guys find it interesting. Please let me know your thoughts and I will see you guys in my next one. Bye.